Welcome back to Dinar Community Channel. The moment that countless currency watchers, investors, and ordinary holders of Iraqi dinar had been waiting for finally arrived with a force that shook the financial world. The revaluation of the Iraqi dinar, long spoken of in speculation, debates, and whispers across forums and financial circles, ignited into reality, and the impact was immediate. As confirmation spread, holders of the currency rushed into banks worldwide, creating a storm of activity unseen in recent history. The events that followed painted a dramatic picture of economic transformation, personal triumph, and global financial recalibration. For years, rumors of a revaluation swirled, gaining traction with every government statement, banking leak, or piece of intel that hinted at a brighter valuation for the dinar. Many had quietly accumulated stacks of currency, believing that one day it would surge in value and alter the course of their lives. That moment is no longer a distant dream. With the official confirmation, the world saw longtime believers suddenly vindicated. The revaluation wasn't a whisper this time, it was a reality, and the ignition of the RV set in motion a frenzy that sent IQD holders running into banks and exchange centers around the globe. Scenes unfolded in major financial hubs like New York, London, Dubai, and Frankfurt, where currency desks reported lines stretching far beyond the normal flow of clients. Inside the United States, cities like Dallas, Houston, Atlanta, and Chicago witnessed banks activating specialized teams to handle the influx. Reports streamed in of appointments booked around the clock, with some institutions staying open past regular business hours to accommodate the massive demand. Bank managers, trained in advance for this day, executed structured protocols that had been quietly prepared for months, if not years. Customers came armed with briefcases, envelopes, and bank bags filled with notes they had safeguarded for years, sometimes decades. The air was thick with a sense of destiny fulfilled. Many IQD holders were not traditional investors but rather ordinary individuals who had once heard of the opportunity from a friend, a relative, or even a financial blog. They took a chance, purchasing what seemed like a long shot, and safeguarded it with quiet hope. On this day, those notes were no longer pieces of colored paper, they were keys to life-changing wealth. Bankers described the mood as electric. Some holders walked invisibly emotional, their hands shaking as they laid down stacks of dinar that were suddenly worth more than their homes, cars, and entire life savings combined. For some, tears of relief streamed down their faces. For others, it was a moment of stunned silence as screen displays showed the new valuation. Stories quickly circulated of individuals who had quietly sat on a few $1,000s worth of dinar, only to see it transformed into millions. At the center of it all was the new exchange rate itself, a figure that had been the subject of speculation for years. When it hit the screens, the confirmation spread like wildfire. Currency platforms showed the official revaluation, trading desks confirmed it, and banking terminals updated to reflect the rate. The RV had moved from hopeful chatter to digital reality. Exchange slips printed with numbers that made people's eyes widen. Overnight, the landscape of personal wealth shifted dramatically for those who had believed in this outcome and patiently waited. But the frenzy wasn't just about personal enrichment. It was about global financial realignment. The revaluation of the Iraqi dinar carried implications that stretched far beyond the banking lobbies filled with eager exchangers. Economists began recalculating regional balances, considering Iraq's new standing in global trade, and what it meant for oil pricing, energy contracts, and investment inflows. Iraq, long struggling with rebuilding efforts and international credibility, now stood at the threshold of economic empowerment. Its currency, once diminished and disregarded, suddenly became a formidable player on the international stage. As IQD holders rushed into banks, financial institutions had to ensure that chaos did not ensue. Security was heightened across major exchange centers, with plainclothes officers and armored transport vehicles quietly deployed to ensure safety. The inflow of wealth into the hands of everyday people created opportunities but also risks, and banks had prepared for this by setting up private exchange rooms, scheduling structured appointments, and deploying wealth managers ready to counsel new millionaires. For many exchangers, the shock of sudden wealth was overwhelming. Advisors immediately cautioned them to move wisely, reminding clients that with great wealth comes responsibility. Amid the frenzy, social media exploded with videos and photos of long lines outside banks, screenshots of new exchange rates, and emotional testimonies from exchangers. Hashtags trended worldwide, as the world's attention locked onto the phenomenon of ordinary individuals becoming suddenly wealthy through the IQD revaluation. The phrase, dinar RV, became a top search term, and financial news outlets scrambled to cover the unfolding drama. Analysts appeared on television networks, debating the broader implications for the global financial system. Was this the beginning of a larger wave of currency realignments? Would other undervalued currencies follow suit? Inside Iraq, the mood was equally transformative. Citizens who had long endured economic hardships, inflation, and limited purchasing power now saw their nation's currency restored to a position of strength. The government heralded the revaluation as a triumph of national policy, economic restructuring, and international cooperation. Prime ministerial statements framed the move as the dawn of a new era, one that would bring Iraq into parity with regional powers and enable it to play a stronger role in shaping Middle Eastern economics. Crowds gathered in Baghdad, Basra, and Mosul to celebrate the development, waving banknotes that had suddenly multiplied in worth. For many Iraqis, the RV was not only a financial event but a restoration of dignity and hope for the future. Back in international banking circles, exchange logistics continued at full throttle. Private exchange centers reserved for high-net-worth clients processed transactions in secure facilities. Wealth management divisions within major banks reported their busiest days in decades. Account setups, wire transfers, investment consultations, and trust fund creations skyrocketed. The sudden influx of new millionaires demanded swift financial structuring, and private bankers worked around the clock to advise clients on tax implications, asset diversification, and long-term planning. Some holders rushed to buy luxury goods immediately, while others sought to pay off debts, mortgages, and loans before even considering new purchases. Car dealerships reported spikes in inquiries, real estate agents saw sudden cash buyers entering the market, and travel agencies fielded calls for luxury vacations. The ripple effects were instant. Yet alongside the spending came a wave of caution. Financial educators, economists, and seasoned investors warned IQD holders not to squander their windfall. Many who exchanged early sat down with legal and financial teams to ensure wealth preservation for generations. The most striking aspect of the RV ignition was the diversity of those benefiting. It wasn't just high-profile investors or hedge funds but ordinary families, veterans who had served in Iraq and brought home dinar, retirees who had taken small risks, and young dreamers who had quietly saved a few notes. Each story added to the collective narrative of transformation. A single mother who had once spent $500 on dinar now saw her children's college education secured. A retired couple who had nearly given up on retirement planning suddenly had more than enough to live comfortably. Veterans who had believed in Iraq's recovery were now rewarded for their faith. The media dubbed it the greatest wealth transfer of the decade, a moment when patience and belief collided with global financial recalibration. Yet experts continued to emphasize that the RV was not just about instant riches but about Iraq's future role. The country's ability to sustain this valuation, attract foreign direct investment, and manage its new standing was crucial. Oil contracts, trade partnerships, and digital banking modernization were already being cited as factors that would either stabilize or destabilize the post-RV era. Meanwhile, the rush into banks continued for days. Appointment lines extended, with many exchangers waiting patiently for their turn. Some banks implemented tiered systems, offering different rates depending on the size of the exchange, while others provided incentives for clients to reinvest funds with their institution. Structured payouts, private investment packages, and exclusive contract rates became common talking points as holders weighed their options. Rumors of even higher private rates swirled in the background, enticing some to wait for special arrangements while others moved quickly to lock in the confirmed value. The frenzy extended to global markets. Currency traders scrambled to adjust positions, hedge funds recalibrated portfolios, and central banks monitored the shifts carefully. The RV of the dinar was not an isolated event, it rippled through oil markets, commodity exchanges, and even stock markets. Companies with heavy investment in Iraq saw their valuations spike, while regional currencies experienced fluctuations in response to the new financial power emerging from Baghdad. The rush into banks also brought stories of cautionary tales. Scammers and opportunists emerged almost instantly, attempting to exploit the chaos. Fake exchange offers, fraudulent investment schemes, and counterfeit rate confirmations began to circulate. Authorities urged IQD holders to only deal with legitimate banks and licensed financial institutions. Security agencies worked alongside financial regulators to clamp down on fraud, ensuring that the event, though frenzied, remained secure for legitimate exchangers. Amid all the excitement, one undeniable truth settled in. The Iraqi dinar revaluation was not just a speculative fantasy but a seismic financial event with real and tangible impact. What had once been dismissed by mainstream finance as dinar rumors now stood as a case study in patience, faith, and the unpredictable power of global economic shifts. The RV ignition did more than create overnight millionaires. It rewrote financial narratives, altered lives, and carved a new place for Iraq in the global economy. As the dust began to settle, banks reported record-breaking days, wealth managers expanded teams, and financial literacy campaigns surged to help new millionaires manage their fortune wisely. Governments worldwide observed closely, with some analysts suggesting that the IQD RV could spark broader discussions about the valuation of other underutilized currencies, potentially igniting a chain reaction in global finance. For now, however, the spotlight remains on the holders who rushed into banks, their lives forever altered by the revaluation. What began as a quiet hope tucked away in safes, envelopes, and drawers across the world had ignited into reality. The IQD RV was here, and with it came a frenzy that would be remembered for decades as one of the most dramatic currency events in modern history. Like and subscribe for more videos.